我感觉我真的挺不住了。
The fate of China's stock market is sealed. There is no escape. Who will take the blame? Xi Jinping, the leader of the Communist Party of China, is willing to make a 180-degree U-turn on policies to stimulate the stock market. However, this surge lasted less than 2 days. Over the past 2 weeks, A shares have absorbed 2 to 3 trillion yuan of people's hard-earned money. On October 11th, major banks that had previously been silent on loans for stock trading suddenly shifted their stance. Over 20 banks issued emergency declarations stating that credit funds are strictly prohibited from flowing into the stock market. Domestic netizens commented that banks know once money enters the stock market, it cannot be withdrawn. At a time when Xi Jinping is desperately trying to boost the stock market, the banking industry has abruptly stopped. Rumors suggest 2 things. First, that the stock market situation is dire, and second, that CCP officials are not taking Xi seriously. In any case, Xi is already seen as a bad emperor. It appears the public's support has waned, and many are waiting for his downfall. Market conditions over the past 2 weeks have wiped out 3 trillion yuan of people's savings. Professional investor Bales wrote that the end of this so-called bull market is certain. It will undoubtedly end in chaos, though he is unsure who will take the blame. The market's collapse was triggered by the central bank, and in the end, it may be a group from the central bank that gets purged and scapegoated. Despite this, authorities are still trying to stimulate the market. The Ministry of Finance is scheduled to hold a press conference on Saturday, where they are expected to announce further large-scale fiscal stimulus measures. Asia Finance holds little hope for these measures, arguing that what is truly needed are political reforms. Without meaningful structural reforms, not only will the stock market continue to fall, but China's real economy will be carved up by emerging markets like India and Vietnam. Asia Finance also pointed out that when China's stock market bubble bursts, large investors with insider information typically benefit, while the vast majority of small investors suffer losses. For instance, during the 2015 stock market crash, the rich and powerful pocketed 250 billion yuan from the poor. This tragedy may repeat now. If the poor finally wake up, A shares may struggle to stay above 1,000 points. Some analysts believe that the CCP's policies aim to destroy people's savings. A self-media article revealed a harsh truth. Having too many deposits is not favorable to those in power. Current policies are designed to deplete people's savings. Excessive deposits mean that money is idling in the financial system, which hampers economic circulation. The government's solution is to issue more currency and encourage spending. Their top priority is to get people to withdraw their savings. However, after learning from recent years, people are cautious, neither investing nor spending, but saving. To counter this, authorities have made a bold move in the stock market, using experts and self-media to create momentum, persuading some to invest their savings in stocks. On the last trading day before the holiday, the 3 trillion yuan trading volume was drawn from investors' deposits. Yet, both deposits and loans have limits. After a sharp rise, a sharp fall follows. Stock traders often find it hard to stop during a rising market. When caught in the excitement, they may be wiped out by a sudden crash. Those who use savings or even take out loans to speculate in stocks risk not only losing their life savings, but also falling into deep debt. The article concludes that starting a bull market is a way to eliminate deposits. This bull market will result in another major transfer of wealth from the majority to a small elite, from the poor to the rich. Instead of thinking about making big profits in the stock market, one should focus on protecting their savings from being wiped out. Observers are concerned that in the context of economic downturn and soaring unemployment, Chinese society is already prone to instability. Now, with the government taking risks, there is a possibility of economic collapse this year, which may lead to public rebellion, social revolution, or, alternatively, in response to this looming crisis, Xi Jinping may tighten control, shift to a planned economy, and North Korea eyes China. New stockholders bitterly complained about their losses, and the artificial bull market was criticized for harming both the country and its people. After the mainland's National Day holiday, the stock market, which had been soaring prior to the break and was even promoted as a bull market, saw thousands of stocks plummet sharply in the first 2 days after the holiday. Many new stockholders were trapped, losing their entire savings. They voiced their frustration online, lamenting that their years of savings had been wiped out in just 2 days. They were devastated, with no tears left to cry. People angrily condemned the artificial bull market as a disaster for the country and the people, labeling it a fraud and an ugly money grab. After the long holiday in China, on October 9th and 11th, the three major indexes in the mainland fell collectively. On the 11th, the Shanghai Composite Index dropped 2.55%, falling below 3,300 points. The Shenzhen Component Index dropped nearly 4%, and the Chinext Index fell by 5%. According to Sina Finance, the three major indexes of the mainland stock market opened lower and continued to decline, with over 4,800 stocks falling. On October 10th, the three indexes diverged but barely managed to hold at 3,300 points after a period of volatility. Earlier, on September 24th, Chinese authorities unexpectedly introduced stimulus measures for the stock and housing markets, which were endorsed by the Politburo of the Communist Party of China. The mainland stock market surged, and occasional bull market propaganda appeared. Mainland media estimated that 3 million new stock investors opened accounts to enter the market. At the same time, however, the main funds in the Shanghai and Shenzhen stock markets fled, with a net outflow of 169.8 billion yuan on the 8th. Many retail investors and new account holders found themselves trapped, and numerous individuals shared their suffering on mainland social media, warning others not to be deceived again. New stock investors voiced complaints and frustrations. Shanghai blogger Wu Shuobiao shared on October 9th that it was his first time speculating in stocks, and he had gone all in. Yesterday, I followed the advice of an economic blogger named Da Lan, but today I became a leak, referring to a naive investor. I lost all the money I earned from 3 years of financial management with Richard. Slumping in his chair, he sighed. Earning money beyond one's understanding is truly difficult. On October 11th, workplace blogger 5 Billion Min Ge remarked that the most unfortunate group of people this year had emerged. He said, I was laid off after Chinese New Year, opened a restaurant with a loan, but it went bankrupt within 6 months. I spent thousands of dollars on self-media courses, but my followers are still in the double digits. Right before National Day, I mortgaged my house and car to raise hundreds of thousands of yuan and entered the market at 3,700 points. Now, I'm really just a leak. Blogger Aji Gay also commented on October 11th, It's terrible. I lost 35% in just 4 days after opening my account. On the first day, the 8th, I lost 12%. Now, I've lost 35% in 4 days. Who on earth keeps shouting that stocks are like free money? Henan blogger, brother Hui Xiaomidi shared on October 10th that he lost 800,000 won in 2 days and fainted on the spot, with no hope of recovering his losses. Mr. Zhang, a hairdresser in Xi'an, revealed that many of his friends with no investment experience had been discussing A-shares. Even the assistants in our store were actively discussing the startup sector and more. A close friend of mine, whom I've known for over 10 years, had finally saved up 3 million yuan over more than a decade. In one night, that 3 million was wiped out, and now he's in debt by hundreds of thousands. His wife is divorcing him, and his business is also on the verge of bankruptcy. He lamented, It's truly tragic to make money but not be able to keep it. Blogger Low Power Life shared that he is a very frugal person who can't even bear to eat instant noodles, has never bought a 2 yuan lottery ticket, and keeps his living expenses below 1,000 yuan a month. However, he lost 10 years' worth of living expenses in just 2 days of stock trading. He recounted his mental journey of being deceived into the stock market, hoping to warn others who are considering entering.